Well, welcome back to my channel. So today we're going to review national questions for all 50 states, Texas questions and answers explained, and some vocabulary. And this is all the sections, all the exams that you'll take, the national and the Texas here in the state of Texas. In other states, you have one exam, which includes everything: national questions, state questions, and of course, the vocabulary helps you answer a lot of the questions. But in the state of Texas, we have two separate exams, the national exam and the state exam. So if for some reason you don't pass both of them, you pass only the national, then you just repeat the state. My understanding, in other states, you'll have to take the whole exam again. Compared to here in Texas. But Texas has the toughest and most questions to get a real estate license. It's 180 hours, 6 courses. Other states only have, 70 hours, 80 hours. So Texas is quite tough, okay, when it comes to that. However, you will be prepared to help buyers and sellers, investors, in addition to getting some mentoring and training. Okay, so today it'll be vocabulary, national questions, and state questions reviewed and explained. And please participate. Type in the question number and the answer after I read each of the questions. So stay tuned for that. Hey, what's up, everybody? This is Wild Lillie Handy Dominguez coming to you from San Antonio, Texas, with whom? AgentPrep, YouTube AgentPrep, and on Facebook, Facebook AgentPrep group and business page, which is designed to help you pass your national and state exams for your real estate license in all 50 states. For the state section, of course, I focus on Texas. There are many other pages that websites, okay, YouTube channels that you can study different states. But on my YouTube channel, it is only for Texas. So I start with the national and vocabulary so that those that are in all 50 states will be able to participate. And then those that are in Texas can stay till the end. All right, so let's get started. This is the book that we're using today, Texas Real Estate Sales Exam. And I love this book. It's by Learning Express. And although it's an old book, okay, well, 2006, not that old, okay, it's excellent for national, for state, because it has 4 exams, exam 1, 2, 3, and 4. It's 287 pages long. It has a little review what the Texas Real Estate Sales license is about and the test, some test preparation techniques and tips, and a refresher course, math review, and glossary. And we're going to do some glossary, vocabulary definitions, whatever you want to call them, from this book today. We're continuing on from a prior video that I did. And so today we're going to start with the glossary, okay? And at any time, type on the chat box and let me know that you have any questions or you're not hearing me right. So also I want to point out that on your computer, you want to set your resolution to at least 720 so that you can see a clear screen. So when you're on Facebook or on YouTube, on the bottom of your computer, you'll be able to click one of the menus on the bottom or the dots and check the resolution of your screen, okay, so that you can see it clearly. Okay, so let me refresh my other screens so that I can be prepared for anybody who is participating on YouTube, on Facebook, and I'll be able to address any of your questions and your comments. So you may hear a little bit of noise on the background as I expand the screens, just like you're hearing there. Let's see here. Oops. So that let's see here. Oops. Let's see. So that bear with me, please. Let's see here. Oops. Let's see. Okay, yeah. So the resolution when you're in the bottom of your page, you have a little wheel, okay, which is the settings. You click on settings, and then you can click on the resolution. All right. And one more screen. Questions for all 50 states. All right, so let's get with it. So with vocabulary, so we're starting out with the word Arello. Arello. Let me enlarge the screen. Oh my goodness. Dang, that's not enlarging the screen, is it? Okay, Arello. So what is Arello? Arello is the Association of Real Estate Licensed Law Officials. You know, I've never interacted with Arello, okay, but it does exist. It's there. I've never used it, but it's the Association of Real Estate Licensed Law Officials, okay? Assessed value. The value of a property used to calculate real estate taxes. So assessed value is not the real market value. If any of you own property, you're going to get a property tax statement every year to pay your yearly property taxes. So the every county, that assesses property taxes, they go by a rate, a percentage of the number of hundreds that you have in a property. So 300,000, you divide by 1,000, then you get so many hundreds. Okay, and then you multiply that times a rate that they come up with. Some would be 2.6, 3. So, and they multiply that by the number of 100s from your 1,000. So 300,000 divided by 1,000 gives you 300. Multiply that by the rate, and that is what the property assessed tax is that we pay yearly. You can also protest the taxes, okay? If they've gone up, which they do, they can be protested every year. The market value is what's happening in the market now based on the comparables of recent sold. So assessed value and market value are different. These are calculated by the assessor of every county. And the next vocabulary is assessor, right? That's the official, public official who works at the county public assessor's office that create the value, come up with the value for property taxes purposes. And they have their own formula that they use, their own maps. They do their own type of comparables, but in a different way than for real market value. So if you ever go and look at your property tax statement, people will say, well, you know, the property tax statement says it's valued, 300,000. That's what I want to offer. Well, that's not the real market value. They want to go by that, but it is a value that we resort to when we're working with sellers and buyers. I like to use it. It's another number to look at to confirm that I am providing a good price range. Assessment, that's the process. So you have the assessed value that's done by an assessor, and that assessed value is an assessment, the process of assigning the value on property for taxation purposes. Okay? And what is an asset? An asset is any item of value owned by an individual. That could be your car, your motorcycle, your house. It can be stocks and any other property, jewelry, anything that has value that you can sell or buy. Assets that can be quickly converted into liquid assets, okay, are like bank accounts and stock portfolios. Houses are not a liquid asset. It takes time to sell a property on the market. In this market, hey, we get offers the first day, the first few hours that it goes on the market. However, it's still going to take 7, 14, 30 days, 45 days to close. So we don't have quick access to that asset. If you needed quick money, where are you going to get it? At the bank or sell some of your stocks. So that is your asset. So it's not just real property, it's also personal property that is an asset. An assignment. Okay, an assignment, kind of like when you're in school, you have an assignment, but this is a little bit different. An assignment is when somebody writes a contract, like an investor, and then they transfer their rights to purchase that property to a third person, to someone else. So they transfer their rights or interest from one person to another. And it's typically something that investors do, wholesalers that are looking for properties that need to be sold, and they have a potential buyer already, or they have a buyer and they go look for a property to sell, almost like a realtor, but they're not representing anyone. That investor writes a contract on that property and uses the word and or assign to. Okay, they could be assigning it to an LLC, a trust, or to another person that is the actual buyer. So that is an assignment. They're transferring their contract rights to another person. Okay, assumption of mortgage. I need to minimize the screen a little bit so we can see the whole thing. Wow. Okay, let me reduce it to 170. Okay, that works. All right, assumption of mortgage. So we're assuming something, not like an assumption in today's market that makes a you know what out of you and me. So an assumption of mortgage, it's the act of acquiring the title of a property that has an existing mortgage and agreeing to be liable for paying that existing mortgage, that existing debt, okay, on that property. So, however, the lender must accept the transfer of liability for the original borrower to be relieved of the debt. So assumptions don't happen very often. Sometimes they are VA assumptions. Sometimes there could be an FHA assumption. Okay. So a VA, right, it's for veterans. They get 100% type of guaranteed loans to purchase a property. FHA, they provide through lenders, okay, 96.5% loans. So that is for buyers who don't have enough money. Some of those loans, or even investors that sell real estate, they could have a clause in the deed of trust or in the mortgage that someone else can assume that property. Well, that new person has to be approved, qualified financially. They're not just going to transfer, the lender or the investor are not going to transfer that mortgage to somebody else and relieve the original person. So let's say I have a mortgage and I don't want that property anymore. I don't want to deal with it, but I don't want to sell it the traditional way because my deed of trust or my mortgage says I can assume it or transfer it to somebody else. Then I find someone else that wants to take over my mortgage payment. They don't have to start from scratch. Let's say it has an excellent interest rate and the payment is low. Investors are interested in taking those over because it has a low interest rate. They're paying more towards the principal. So that seller will will transfer it to somebody else with the agreement from the lender. The attachment, the process whereby a court takes custody of a debtor's property until the creditor's debt is satisfied. So there's going to be a lien or something attached to the property, okay, until that debt gets taken care of. So some attachments are a lien or a judgment, okay. Attest, to bear witness by providing a signature. So when we go and get documents notarized, sometimes it requires a witness. So we have to take someone with us to witness that we are who we say we are. Okay. And we provide our driver's license or passport, any other type of ID, okay, that has our picture. Attorney in fact. It's another word for power of attorney. A person who is authorized under a power of attorney to act on behalf of another. So sometimes individuals will buy a property, but they're out of state and they have a family member where the property is located. So they'll give that power to their family member or friend or whoever, an attorney or an accountant, whoever they assign to, that individual will sign a power of attorney for that particular property, and they will do the signing for the actual person. So an individual, sometimes in the sale or purchase of properties, there's an elderly person or an ill person, and they'll give their authority to someone else to sign on their behalf, but only on that property, not on everything that they own. Avulsion, the removal of land from one owner to another when a stream or other body of water suddenly changes its channel. So, that's channel, a stream, a river, a creek. Okay. If there's let's say a flood or rainstorm, and the banks of the creek, the stream, or the river start falling, well, some of that soil, right, some of that land is going to be removed from that bank and end up on somebody else's land. Nobody gets penalized. Nobody gets fined. Nobody gets sued. It's an act of nature. That is avulsion. So there's different words, okay, having to do with land removal and land addition. There's attrition, accretion. So they're confusing. They confuse me too. Avulsion. Okay, that's it for vocabulary today. So any questions on vocabulary before we move on to national questions? Anybody that's on Facebook, on YouTube, go ahead and let me know if you have any questions. And at any time, for those of you that just came on, we just finished doing vocabulary, and this video is recorded. So it'll be on the YouTube channel, YouTube AgentPrep, and it'll be on the Facebook group, AgentPrep, and on the business page. So not to worry, you haven't missed anything. It'll be, the recording will be available as soon as the class is over. So we're going to review national questions next, and at the end, state questions. So while you're on YouTube, if you haven't subscribed to my channel, hey, click that subscribe button. Click also the little bell so you're notified every time I go live, and write a comment. Let me know what you'd like to learn next. And also, if you're already a realtor or you're getting ready, if you want to learn how to get your business going, I also provide those types of videos. All right. So let's go with national questions. And we're continuing questions on this book. Okay, this book right here, the Texas Real Estate Sales Exam. If you're interested in getting that book, send me or message me your email. Okay, and it's online. Okay, it's a free book that I downloaded from Google. But for easier access, you can send me your email and I'll forward it to you. Or you can go to my Facebook group, AgentPrep Facebook group, and put your email in there, or you'll also access it from there. It's my guide number 3. Okay, national questions, number 41. Okay, so put your thinking cap on answering questions. We'll review how to understand the question and the answer. So an encumbrance that states a monetary interest in someone's property is called what? So encumbrance, vocabulary. Okay, monetary interest, vocabulary. See how important vocabulary is? So what is an encumbrance that states a monetary interest in someone's property? A, an encroachment. B, a deed restriction. C, an estate at sufferance. Or D, a lien. So what is an encumbrance? First of all, you need to know what that is. Good morning, Jen. How are you? So type your answer on the chat. I'll give you a moment to do that. And then I too will type the answer in the chat. Okay, so far I have 41D from Rosaura. I have 41A. Jen, I would go back and choose another one. It is not A. Think about it. What is an encumbrance? Something that's attached to the property. See, it says an encumbrance that states a monetary interest. Encroachment is not a monetary interest. Okay, so an encumbrance that states a monetary interest in someone's property. On the road again. Gotcha. So an encumbrance that has monetary, a dollar value, okay, interest on that property is a lien. It's attached to that property. It is a financial lien. Hi, Vladimir. Thank you for joining us. Okay, so what was a key word? Encumbrance and monetary. Monetary triggers you to answer that it's a lien, right? Because a lien is a monetary attachment, encumbrance to a property. The property will have a lien. If you go to the courthouse and you look on any records in the county clerk's office, you can ask, hey, I'd like to see what is recorded for this property. Investors do that, but we can find a lot of things online nowadays, and that'll be a lien. Got it? So the answer was 41D. An encumbrance is a lien and when it has a monetary value. All right, number 42. You know what? Let me enlarge the screen here. For those of you who are on the phone, we can see it a little bit larger there. Okay, that's larger for anybody watching on the phone. I highly usually recommend, right, that you have access to a computer. However, that's not always possible. And we can learn while we drive, listen, and take advantage of that time. Okay, number 42. Which of the following will terminate an agency relationship? So what is an agency relationship? First is what we have to know. So which of the following will terminate an agency relationship? A, the death of the customer. B, the death of a salesperson. C, the death of a client. Or D, divorce of spouses in a common agency. Okay, so who is the agency relationship with, right? Broker and realtor and, because remember, we have fiduciary duties. And who do we have that fiduciary duty? How is that fiduciary duty formed? Type your answer in the chat. That's awesome that y'all are participating. This is how you will learn. Vladimir, I would choose another answer, okay? D is not correct. And you probably went with D because it says common agency. No. Agency relationship, okay, is between the broker and the client, right? That's how a agency relationship is formed in real estate. So how is it terminated? Hi, Sandy. Thank you for joining. Okay, when the client dies. That's how, in the choices that we have here, it's the death of a client. Because a customer, we don't have an agency relationship. They have not signed anything. When they're a customer, there is nothing in signing that we are representing them. Death of the salesperson? No. If a salesperson dies, the listing or the contract is with the broker, right? So it stays there. It continues. they'll assign it to another realtor, and that realtor will close the transaction or the broker themselves. Okay? So it is the death of a client, not the divorce of spouses in common agency. Okay? The divorce of spouses has nothing to do with agency relationship in a real estate transaction, right? We're dealing with real estate transactions here with brokers, realtors, agents, and clients or customers. Okay. All right, number 43. The Residential Lead-Based Paint Hazard Reduction Act allows tenants to have prospective residential lease property inspected by certified professionals if the property was constructed prior to which year? Lead-based paint, right? That is a federal national act, regulation, law. It's not by our particular real estate commission. Okay, that's a federal law. So what year does it have to be built prior to in order to request a lead-based paint test? I mean, they can request a lead-based paint at any time, all right, but it's extremely more common prior to a certain year. And you can actually buy some of these tests at Home Depot or Lowe's. They're not the most professional way, but they will help give a result of whether there is lead-based paint that's chipping off the wall. Correct. The answer is 1978. A. Very good. Welcome, Jennifer. Awesome. That's awesome that you're all participating, or the majority of you. Let's get 100% participation here. All right. You'll benefit from the participation. Yes, it might be scary, but that's all right. You know, we all get scared and we still do things. Awesome. Okay, number 44. Truth in Lending Laws, like Truth in Lending Act, TILA, okay, that's the acronym, were created primarily to protect whom? A, the lender, B, real estate brokers, C, consumers, or D, property owners. Truth in Lending Laws. We know it as Truth in Lending Act, TILA, T-I-L-A, was created primarily to protect whom? Lenders, real estate brokers, consumers, or property owners. Type your answer in the chat, the question number and the answer. Hey, y'all, something happened and hopefully you're still here. We lost you. Yes. So you may have to refresh your screen. Yeah, my computer froze, but it's back. So you may have to refresh your screen. All right, so the answer was 44C. Like so many federal laws, okay, they're created to protect the consumer. We are the consumer, the buyer. Now, we're the realtor or a broker or an agent. However, these laws, Truth in Lending Act and many other laws, are for the consumer, the buyers, right? All right, number 45. Which of the following deeds provides the purchaser, with the lease protection in regards to covenants and or warranties given by the seller? So which of the following deeds, okay, it's a deed, a type of deed. And what is a deed? Okay, I can't describe the deed because then I'll give you the answer. It provides purchaser with the lease protection, a purchaser of real estate property, the lease protection in regards to covenants, restrictions, or any warranties given by the seller, any errors or any claims that may have been made. So which deed provides the least protection? Okay, basically almost no protection. Very good. Keep participating. Keep answering those questions. You're doing awesome. And yes, the answer is D. Hey, Sandy, I like it. Oh, man, can you imagine if there were that many answers from A to S? Oh, boy, we'd never finish the exam. But yeah, hey, I do typos all the time. So 45D, a quit claim deed that has no warranties. So when are quit claim deeds used? Well, let's say a family member is conveying a property to another member and it's free and clear of liens. And so they just want to, gift it or transfer it to a family member. It's free and clear. Then they can do a quit claim deed. It's like a one-page document. Okay. Sometimes the title companies will use it. Investors will use it if they're taking over somebody else's investment, but that's only after making sure there aren't any liens on that person's or that investor's. I have taken over a piece of land from some other investor, okay, and to partner with a third investor. But I knew it didn't have any liens, so I took the quit claim deed, transferred the property from the investor to me. Okay, so it can be done securely and safely, but for the most part, we don't want to use them. Okay, they're an easy, quick way to transfer a property name, a property owner. In general, at the purchase and sale of a property, when we're dealing with clients, there'll either be a general warranty deed or a special warranty deed that is provided. And who signs the warranty deed? The seller does, right? Only the seller signs the warranty deed. Seller or sellers. Okay, so 45D was correct. Awesome. All right, number 46. Which of the following is not an annual operating expense used in income approach appraising? Okay, there's three different types of appraising. Income approach is one of them. Okay. And this is done by the appraisers. We do a comparable market analysis. So do appraisers. But there's one particular one that which is the following is not an annual operating expense used in income approach appraising. A, real estate taxes. B, debt service to fund outstanding loan balances. C, property casualty insurance. Or D, property management and leasing fees. All right, so While you all are typing that answer, I'm going to com/Facebook. Okay, Jennifer and Rosaura, you can go to that link that I just posted, StreamYard.com, Facebook, and give Facebook permission to post your name on StreamYard. So let's see. Sandy says, good morning. Thank you so much for all you do. Always looking forward to studying with you. Oh, Sandy, oh, you're just making my day. You know, that is so awesome. It's always great to hear feedback from my students, anyone that's watching, and that it helps you pass. I know it has helped many, many students pass and become realtors. And with that said, just keep in mind that once you pass your exam, okay, I am looking for a realtor to partner with me at eXp Realty. Okay, so I've got several people answering 46 BBB. Okay, and yes, the answer is 46B. So a debt service to fund outstanding loan balances is not an operating expense. All other expenses, except for the loan balance of debt service, is an operating expense, okay? The property taxes, the interest on the loan, okay? A property management, or you're managing the property, the landscaping, maintenance of the grounds, repairs, appliances that are replaced, water heaters, all of those are an expense. If you have a a home warranty plan to cover appliances, that is also an expense. So when we own property and we have all these expenses, a lot of times we may not owe any income taxes because we have more expenses than income. I've experienced that a lot. I spent so much money upgrading the properties, and in order to provide a better passive income flow, that when I go to end up doing the income tax returns, you know, our real estate income or investment income may not be higher than the expenses. And you wonder, well, then why the heck would you own property and not make any money? Well, that's what the rich, the loopholes that the rich have created in order to pay less less income taxes. You can actually make a lot of money and have a lot of expenses, and it looks like you don't make any money, but you actually do. And especially when you end up having an LLC or a corporation. All right, so 46B was the correct answer there. All right, number 47. What time is it? 10:39. Okay. So we're going to do 10 questions and then move on to state questions. All right, 47. An accrued charge on a closing statement is paid how? A, in advance. B, in arrears. C, always by buyer. D, always by seller. So what is accrued? Definition, vocabulary, glossary. What is an accrued charge? So I'm going to take a sip of coffee while you answer that question. So when you pay your credit card, when you pay your mortgage, you know, certain things are considered accrued. What does that mean? Are they paid in advance, in arrears, always by the buyer, or always by the seller? Keep on participating. Come on, more of you. Come on, come on, come on. There's a whole bunch of you in here, so come on, participate. It's exciting to be here and seeing you participate and helping you understand the information. I want you to pass. I want you to become realtors. I want you to do even better than me, okay? Which you can. B, lots of BBBs. Vladimir, it's not C. No. An accrued charge on a closing statement Okay, it means it's owed but not paid, right? Like the credit card charges, we charge it, we owe it, and then we pay it. Therefore, an account is paid after charges were made, right? Such as real estate property taxes or credit cards. So these are accrued and then we pay for it. These are charged to us and then we pay for them. So we use it and then we pay for it. So accrued charges on a closing statement or any credit card or anything else is paid in arrears. Okay? It's paid after it has happened. So the answer is 47B. Oh, don't apologize, Vladimir. That's okay. So that's good. So accrued. Hi, Jose RG. Okay, on StreamYard, I don't see your name. So remember you all to go to StreamYard.com/Facebook. Give Facebook permission. All it takes, it's a click, a couple of clicks, so that I can see, we can all see your name, okay, here. Like we see Vladimir, we see Jen, okay, we see YouTube. It's because we have all given Facebook permission to post our name on StreamYard, which is the software that I'm using to stream to 3 different locations. Hi, Alana. Thank you for joining us. Very good, y'all. All right, 48. Oh, I've got to minimize this screen a little bit so we can hopefully see it all on one page. All right. A salesperson receives an offer on their listing from a salesperson with another broker representing a buyer who is a previous client of the listing salesperson. So a salesperson receives an offer. So an agent receives an offer on their listing. So they represent who? The seller. From a salesperson from another real estate office, another broker representing the buyer, who is a previous client of the listing salesperson. Okay. So here's salesperson A, who represents the seller, salesperson B, who's representing a buyer. And that buyer used to be a client of salesperson A, but they're now with salesperson B. Which, if any, of the fiduciary duties does the salesperson owe the previous client? Okay, so it says, which, if any, of the fiduciary duties does the salesperson owe the previous client? So that means salesperson A, because the buyer is their previous client. Do they owe that salesperson, that client, any fiduciary duties? Remember, who do we represent? A, the salesperson owes no duty to any previous client. B, the salesperson owes full fiduciary duties to a previous client. C, the salesperson owes only the duty of full disclosure to a previous client. Or D, the salesperson owes the duty of confidentiality to the previous client. Okay, so far I've got the answer D. No, that's a long one. Sometimes I leave those for the end. I answer all the easy questions first on an exam, and that's what I highly recommend to you. Answer all the questions that look easy to you. Answer all those first. Make sure you're comfortable with them. Then go back and answer all the difficult ones. Because once you answer all the easy ones, you'll have a lot of time left and you can go and answer the difficult ones. So D. Okay, somebody answered B. Now, B is not correct. We do not owe. See, salesperson A represents a seller. That's who they owe full fiduciary duties to, not to the previous client. We don't that realtor A doesn't represent that client. So you cannot represent both clients, a past one and a current one, fully. Okay? We only owe them what? The confidentiality, just like a doctor, an accountant, a lawyer. Okay? a counselor. They owe the confidentiality to the previous client. That's the main thing that we owe them. Our fiduciary duty now is to the current client. Alana, please remember to type the question number and the answer when answering. That way, myself and everyone else knows which question you're referring to. Okay, question 49. Any questions on that one? Okay, 49. When a property owner leases his property, at the end of the lease, he has what? A reversionary interest in the property. B, a remainder man interest in the property. C, 30 days to terminate the lease. Or D, a possessory right to the property. So what happens when a lease ends? The property owner owns the lease. They leased it to a tenant. What happens to that property at the end of the lease? Does it revert? Does it go to a remainder man? Does it have 30 days to terminate the lease, or has a possessory right to the property? Which one is it? Major vocabulary here, major glossary. For those of you who answered D, go back and think about it. If you own a property and you lease it to somebody, the tenant has possession of it during the lease. But after the lease expires, yes, we have possession. However, what is it actually called? What happens to the property? So when a property owner leases the property, at the end of the lease, they have what type of interest on the property? They own it. So not just possessory. Possessory doesn't mean they own it. So those of you who answered A, that is correct. Reversionary. Okay, because the owner has possession and ownership, not just possession. Possession means they can only use it. They don't have all the bundle of rights. An owner has all the bundle of rights, right? Own it, possessive, freedom of use, freedom of appreciating it, enjoying it, the ability to get a loan on it, the ability to transfer it, all the bundle of rights. That is reversionary interest. They have an interest in that real estate, not just possession. The tenant has possession of it during the lease, but after it expires, then the owner has the ownership, has all the rights to it, all the bundle of rights. So it is reversionary. Go and study that vocabulary. Okay? That's why I stress vocabulary, 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 and so do other teachers. Okay, number 50, last national question for today. Ad valorem real estate tax is which type of lien? Ad valorem real estate tax is which type of lien? Where do you see ad valorem? A, specific voluntary. B, general voluntary. C, specific involuntary. Or D, general involuntary. So first you want to know, ad valorem real estate tax, okay, is on a property. So is that a specific lien or is it a general lien? Specific is assigned to one property. General is very broad. So once you know whether it's specific or general, that you can determine, is it a voluntary lien or is it involuntary? So that's how you approach the question. What is real estate tax? That's what ad valorem tax is. It's on your property taxes that we owe. So it's either going to be specific or general. Remember, general is very broad. Specific is to 1. Then, did we volunteer for that tax, or is it involuntary? Do we have to pay it whether we like it or not? Okay, anyone? So far I have C and A. C and A. So specific is correct. However, it is involuntary. None of us wants to pay property taxes. Property taxes, IRS taxes are involuntary. Okay? So ad valorem tax is created by statutory property tax laws and is levied, okay, against a specific legal address, a legal description address. So property tax liens are involuntary. That way we can lose our property if we don't pay our property taxes. Since non-payment, property tax liens are involuntary, since non-payment by a property owner will result in a tax foreclosures. Okay, and that's why there are tax lien auctions, okay, at the step of the courthouse the first week of every month. Okay, there are tax lien foreclosures, tax lien auctions. So very good for those of you who, all of you agreed that it was specific, right, to one property. However, it is involuntary. Okay, so that's it for national questions. We're going to shift to state questions. Any questions on that? You're doing awesome for participating. That's great. I love it. So in the moment that we transition, so if you haven't been to my YouTube channel yet, hey, go on over there. It's growing. I want to hit 1,000 subscribers by the end of June, or earlier would be awesome. So go to my YouTube channel, YouTube AgentPrep. Tap that subscribe button, click that little bell, and like this video if you find it worthwhile, and comment and make any comments other than just the answers at this point, and let me know how else I may help you. And when you're ready to select a sponsor, okay, I'm also helping those realtors join my organization, okay, as your sponsor, not as a broker sponsor, but as a realtor sponsor. So reach out to me. You're going to be interviewing with lots of different brokerages, okay, and you're going to need to select one. I would love to have you partner with me. Hopefully we would be a good fit for each other. I don't take everybody. And, I would love to have full-time realtors. However, part-time realtors sometimes shock the heck out of me and do awesome. So remember to reach out to me, okay, once you pass your exam or prior while you're evaluating different brokers. All right. This is good. You're welcome, Alana. All right. So that's enough for national. Now state. So state is for Texas, right? Because I am licensed in Texas. And so I've only been doing Texas questions. Maybe at some later date, I may do other states, but at this time, I only do Texas. All right. So I lost you all again. I don't know, something going on with the internet today. Hopefully you're still here. Okay. Or come back and refresh your screen because I just got turned off and back on. Okay. State questions. So tax deed lists both the wife and the husband as owners of the property, which they will reside on it. It is presumed, and this is in Texas, at what? A, that the property is community property with each of them owning half undivided interest. B, that the property is owned by both them as tenants by the entirety with rights of survivorship. C, as dower property. D, as courtesy property. So in Texas, what is it called? Is it common property, half divided, undivided interest? Is it tenants by the entirety, a dower, or a courtesy? If you're not in Texas, then you are probably going to think of a different one because many other states, it's called tenants by the entirety. So I just helped you with an answer there. Okay, Vladimir says A, that property is community property with each of them owning a half undivided interest. Anyone else? So yes, the answer is A. In the state of Texas, we have community property, and each owns half, 50%, undivided, which means they own the whole property. They have possession and access to the whole property, but they own 50% if and when they decide to sell. In other states, it's tenants by the entireties, and they have rights of survivorship, meaning that if one spouse dies, their percent goes to the spouse. But Texas, it's a we are a community property state. All right, 101. Okay, I need to reduce the screen in order to see it all. I think that'll work there. Okay, 101. So did I show the answer? There. This is a long one. Sometimes I leave those to study, to do them later at the end of the exam. But if you're a fast reader, hey, go for it. Salesperson A obtains a listing for a property in Sunset Terrace. In the listing, permission is given to the broker to function as an intermediary and to make appointments of associates to communicate with each party. Salesperson B is working with a buyer who wants representation, but does not want to sign a buyer representation agreement. Salesperson B prepares an offer for the listing obtained by salesperson A, and both parties are given written notice that salesperson A is communicating with the seller and salesperson B is communicating with the buyer. Which of the following best describes what is taking place? So remember, this buyer doesn't want to sign, okay, a buyer representation agreement. It says they want representation, but doesn't want to sign one. So they are still what? A customer, right? They're not a client. So which of the answers is correct? A, this is properly done intermediary transaction. B, this is an illegal act under the provisions of the Texas Real Estate Act known as TRELA, T-R-E-L-A. C, each of the parties has his or her own agent. D, the broker is functioning as a properly appointed intermediary. So the question said, in the listing, permission is given to the broker to function as an intermediary. So first you need to know, when can a broker function as an intermediary? Okay, that's the question you ask yourself. Is this really an intermediary position or not? Because the buyer is not represented. Okay, so I've got C, C, D. Well, I hate to tell you, but both those answers are incorrect. So choose another one. So here, when you know what an intermediary is, you'll be able to answer this question. There is only one client being represented, and they're both basically represented by both realtors, the listing realtor and the other realtor as a sub-agent. So when you have a listing realtor and a sub-agent, we do not have intermediary because only one client is being represented. So the answer is B. This is an illegal act under the provisions of the Texas Real Estate License Act. The fact that they are functioning as an intermediary, it is not an intermediary situation because the buyer is not represented because the buyer did not want to sign a buyer rep agreement. Therefore, salesperson B is a sub-agent to salesperson A or to broker A, even if they were to be with the same broker or with another broker. Okay? Do you have that? Intermediary, both realtors have to be representing each a client and under the same broker. And here, only one realtor, one salesperson was representing a client. Right? So the answer is 101B. It is not an intermediary situation. So make sure you understand that intermediary happens when each client has representation. They are a client, not a customer. In this case, the buyer is a customer. So first, they both have to be clients. Secondly, they have to be represented by the same broker. Okay, not different brokers. In this case, it was on Sunset Terrace, and the listing permission is given to the broker to function as intermediary. Okay, the listing can say that. However, there is no buyer agreement that says they can function as intermediary because the buyer is not represented. Okay. All right. 102. Which of the following is not listed as included in the property to be conveyed in paragraph 2 of the Texas Real Estate Commission Form 1-4 Family Residential Contract? A residential contract. That's for resale, not new construction, but for resale. A 1-4 family residential. A, window air conditioning units. B, a freestanding stove or range. C, a self-contained spa with cover and heater. D, gas fuel fireplace logs and fireplace screens. So which are part of the house that go with the house? They have a purpose, okay, a function, an intent, an agreement, Maria, right? What kind of fixture are they? So which of the following is not listed as a fixture included in the property to be conveyed in paragraph 2 of the Real Estate Commission form? So you would have to go back to that contract, okay, on the contract to see all the different items and understand that. And there are a lot of little items listed on there that are not included with the property. They don't go with the property. They don't go with the land. They're considered personal property. They don't perform a necessary requirement. So far I have one person taking the risk to answer, and that's Rosaura. Okay, Vladimir, it is not A, so I would look again, because a window air conditioning performs a purpose, all right, a function, and that is to cool the property. And you would say it is attached to the property. Even though it just sits on the window, it could be, the frame could be screwed on. Okay, so it's attached and it functions. It has a purpose. Okay, anybody else? Okay, the answer here is going once, going twice, gone. The answer is C, a self-contained spa with cover and heater. Okay, a self-contained spa, right, is going to be sitting above ground on the deck, on the porch, and it is freestanding. Okay, it is not attached to the property. Now, the fact that it might stay will be under the agreement, which is part of MORIA, right? The acronym MORIA, agreement of the buyer and the seller. So the answer is 102C, a self-contained spa with cover and heater. Okay, number 103. Oops. Must be a long one on the other side. Yes. Okay, 103. Under the Texas Real Estate License Act, TRELA, that's the acronym, TRELA, T-R-E-L-A, all of the following actions are caused to suspend or revoke a license held by a broker or salesperson, except A, revealing to an owner an offer that is well below fair market value. B, acting in dual capacity or of broker and undisclosed principal in any transaction. C, failing to specify in a listing contract a definite termination date that is not subject to prior notice. Or D, placing a sign on real property, offering it for sale, lease, or rent without the written consent of the owner or his or her authorized agent. So it says all of the following actions are caused to suspend except one of them, right? So one answer is correct. So which one is not a cause for suspension? Remember, we are in Texas. One, we always have to disclose. And if we don't have a start and termination date in a listing or a contract, there has to be one. And do we place a sign somewhere without having permission? No, right? So the answer is 103A, revealing to an owner an offer that is well below fair market value. Whether the owner or not wants that to see a lowball offers, we must present them. Unless that owner puts it in writing that they specifically do not want to see any offers below a certain price, it has to be in writing and provided to our brokers. So the answer is 103A. Okay. See, placing a sign on somebody's property without their written consent, okay, is illegal. Failing to specify a start and end date of contract is illegal. It's an invalid contract. Acting in dual capacity of broker and undisclosed principal in any transaction is illegal. Okay. So they are cause for suspension or license revocation. The only one that is okay is that we present all offers, whether it's below or above fair market value. Okay. All right, number 104. Okay, we're at an hour and 12 minutes. I may go a little bit faster, oh boy, but not when they're long questions. These long questions used to scare the heck out of me during exams, okay? So don't think that you might be the only one that gets scared, okay? Even us that want to take a broker license, which I'm not going to do anymore. I don't need it, being at my brokerage. I can have a group of realtors and help them all without having to be a broker. Man, when we take a broker license, even though we might practice real estate every day, we may still fail the exam. So not only you as a student can get scared, so do top producing realtors that have been doing business for years. Okay, 104. The buyer wants to offer $275,000 for a resale house by paying $150,000 in cash as closing and pay the seller monthly interest payments of $625 for 2 years. At the end of the 2 years, the buyer will pay the final $625 interest payment and the outstanding principal amount of $125,000. In preparing the offer to purchase using Texas Real Estate Commission promulgated forms, the buyer's agent will do what? A, write the details of the 2-year interest-only loan in special provisions, paragraph 11, since it deals with the business details of the transaction. B, use the 1-to-4 family contract, paragraph 4, and the seller financing addendum to define the proposed financing terms or arrangements. C, call the listing agent for instructions on how the seller wants to set up the business details of the transaction. Or D, write it as a cash offer with details of the seller carryback defined in a separate agreement that will be drawn by the seller's attorney at closing. So remember, when we have documents or contracts promulgated by TREC that are available, okay, we will use those instead of writing something in the contract in special provisions. Because whatever we write in special provisions, number 11, that's because we're instructed by our client to write it in there. But if there are forms that exist that we can use, then we don't use that. So here you have a buyer willing to offer $275,000, putting down $150,000 cash, and then offering to pay the seller $625 monthly interest payments, interest-only payments for 2 years. At the end of the 2 years, they're going to pay $125 principal amount, right? Because they only paid interest. So which one would it be? Put the details in special provisions. A, use the 1-to-4 contract and the seller financing addendum. B, call the listing agent for instructions on how seller wants it set up. C or D, write it as a cash offer with details on a carryback defined in a separate agreement. Is it a cash offer? Cash offer would mean it pays the whole thing, right? Nobody's taking a risk on this one. Come on, type your answer, take a risk. It's okay. Nope. The answer is 104B. Okay. Use the promulgated contracts 1-to-4 family contract, paragraph 4. Okay. That's where you put the amount that's putting down cash and how much is a loan or type of financing, and selecting what other addendum is included. And that is the seller financing addendum that defines the proposed financing arrangements. Okay. So at the end of the 1 to 4 contract, well, not quite the end, okay, there are all these different addendums that we can include with the contract. Seller leaseback, buyer lease for up to 90 days, owner financing, which is seller financing, third-party financing, cash. Okay, there is no addendum for that. It's just all set up in the item number 4 or 3 of the contract. LeadBased Paint. There's the HOA form. There's all these different other forms that are promulgated. LeadBased Paint is not promulgated by the Real Estate Commission. That is a federal form. So that's the only one that is not. That's one that is not promulgated. I shouldn't say only. Okay, so the answer was 104B, the 1 to 4 family contract and the seller financing addendum, because it's not 100% cash offer. And the buyer is paying interest only. Why? So that they can have a low payment and then pay off the balance in 2 years. All right, number 105. Jessica owns a rental property that is rented to a tenant and in which her husband has no ownership interest. Jessica wants to sell the property. Who is required by Texas law to sign the listing agreement and the deed? So here is Jessica. She owns a rental property and it's rented. And her husband has no ownership. So when they got married, she owned the property, or she bought it under an LLC, right? And it's paid by separate money. Jessica wants to sell the property, okay, like she's married. So who is required to sign the listing agreement and the deed? The listing agreement is signed at the beginning with a broker or realtor in order to put it on the market for sale. The warranty deed is signed by, at closing. So who is required to sign both of those agreements? A, Jessica. B, Jessica, her husband, and the tenant. C, both Jessica and her husband, or both D, Jessica and the tenant. Hey, come on, y'all. Type in the answer. Okay, Vladimir says A. Going once, going twice. 3. All right, gone. The answer is A, 105A. Only Jessica signs the listing agreement and the deed. However, the husband will have to sign other documents, okay, agreeing to the sale. Because let's say they spent money for remodeling or upgrading things on that home. Then the husband will own a percentage of anything that was done while they're married, okay, if it's a privately owned property. It's not on a corporation or an LLC, okay? So, but if the husband hasn't contributed, he doesn't own any part of that property. Now, the rental income belongs to both of them. But in this case, who signs the listing agreement and the deed? Only the owner that's on the property taxes, okay, on title. So Jessica is on the deed. Jessica is the owner. She signs the listing agreement. And at closing, the husband will sign other documents, okay, agreeing to sell it, but not the deed and not the listing agreement. The only individuals that sign a listing agreement or whoever shows up on the property tax listing, okay, at the county records or on the warranty deed that they have. Okay, so 105 is A. Only Jessica. So very good for those of you that answered A. Number 106. In walking through the Miller mansion with her customer, an out-of-state buyer, salesperson Judy Jones notices that there is evidence of recent flooding in a corner of the utility room. Knowing that the dry season has already begun, Judy decides to keep the information to herself. Her conduct is what? A, acceptable because she is not the employee of the listing agent. B, unacceptable because she must disclose her pertinent facts about the property. C, acceptable because she does not represent the seller. Or D, unacceptable because as a real estate licensee, she is a subagent to the seller. So in walking through the Miller mansion with her customer, an out-of-state buyer, salesperson Judy notices, okay, that there is evidence of recent flooding. So the salesperson Judy is walking through that Miller mansion, and that buyer is a customer, an out-of-state buyer. So when we know about material facts that are also visible, and even if they were not visible, but we are aware of them, what are we supposed to do? Anybody? Type your answer, the question and the answer number, or the question number and the letter answer. Vladimir, I would reevaluate that. Okay. Yes, they're a customer. Okay. But at this point, she's just touring the house. She's just showing it. There is no contract. Okay. Rosada says B. The important fact is that, yes, it's unacceptable because she must disclose pertinent facts about the property. It's not D because there is no contract yet. If there was a written contract signed by the buyer, even though she doesn't represent the buyer, then she would be a subagent to the seller. But at this point, there is no signed agreement of any kind, nor a contract. However, anything that we know that is pertinent facts or material facts about the property, we must disclose. Okay, so the answer is 106B. She must disclose. So it's unacceptable because she must disclose pertinent facts. Very good. All right, 107. Another long one. Oop, gotta reduce it some more. Okay. 107, real estate salesperson Sam is preparing an offer for the purchase of the property located at 1836 Bluebonnet Boulevard and is not sure of the legal description of the property. To complete paragraph 2 of the Texas Real Estate Commission, that's where we write the description of the property. Excuse me. The legal description of the property on the 1 to 4 family residential contract form, he should do what? A, call the listing company and obtain the legal description from whoever answers the phone. B, obtain the legal description from the county appraisal district, making certain that he obtains the lot, block, and section numbers as well as correctly spelled name of the subdivision. So in Texas, we use lot and block, okay? And other states is the rectangular system, which is for acreage. C, fill in the street address for now and fill in the other blanks after everyone else has signed and he has an opportunity to verify the accuracy of the information. Or D, use the information given on the MLS data, even though he is reasonably certain that it is incomplete and probably incorrect. So what are we getting paid to do, right? There are things that we're getting paid to do, and whether we want to do them or not, it's a must. We're getting paid by the broker, right, through the client or through the other realtor. Okay, so far I've got 107B. And yes, that is the correct answer. 107B. Obtain the description from the county appraisal district. We don't use the address. We don't take the word of somebody else, the other realtor or the MLS. We go to the source, and that is with the county appraisal district. And we have access to those websites when we become realtors, and even as public individuals, everyone has access to that website, the county appraisal district. Okay, number 108. Which of the following, oh, let me enlarge the resolution here. Which of the following is authorized by statute to promulgate forms for mandatory use by real estate brokers and salesperson? Which of the following is authorized by statute, by law, to promulgate forms for mandatory use by real estate brokers and salespersons? Of course, this is in Texas. Okay, every state is different. A, Broker Lawyer Committee. B, Texas Association of Realtors. C, Texas Real Estate Commission. Or D, Texas Attorney General's Office. So who are we licensed by? So who has the authority to require for mandatory use of certain forms by us, salespeople, brokers, agents? Type your answer on the chat box. Nobody? The answer is B, Texas. I'm sorry. The answer is C, you all. Sorry. I need to correct that. Let me see. Can I correct it here? Delete comment. Dang it. It didn't put user. The answer is C, Texas Real Estate Commission. Okay. I said the wrong letter. So that's who promulgates the contracts, okay? The 13-person committee, Broker Lawyer Committee, they create the documents, all right? That's weird. Why didn't it type it? Huh. The answer is 108C. The Texas Real Estate Commission. If you're in a different state, it'll be your commission for that particular state. Okay, but we're here in Texas reviewing Texas questions. All right, number 109. According to Texas Real Estate Commission canons of professional ethics and conduct, to whom do Texas brokers owe the duties of fidelity, integrity, and competency? Okay, according to TREC, canon of professional ethics and conduct, to whom do Texas brokers owe the duties of fidelity, integrity, and competency? A, every buyer and seller. B, clients. C, Texas Real Estate Commission. Or D, customers. So who do we owe our fiduciary responsibilities to? Type your answer in the chat box, the number and the letter. Gosh, you all got shy on me now. You got scared with some of these questions? Don't be scared. Go ahead, type your answer. All right, let's see. So far, I've got 109B, D. No. Rethink that, Rosaura. Who do we owe fiduciary duties to? integrity, fidelity, competency, that we know the information. I mean, we owe honesty and fairness to customers, but we owe fidelity, integrity, and competency to our clients. The answer is 109B. We owe very little to the buyer, that is a customer. We do owe them disclosure of material facts, anything that's public, and fairness and honesty. But to the client, we owe them all our fiduciary duties, including fidelity, integrity, and competency. Okay, we don't have to trust them, but we're loyal to them. We're honest. We help negotiate. We guide them. We represent them in the process and give them ranges of what they should offer, okay? And listening to them and confidentiality, right? Fiduciary duties, that's what we owe them, but not to the customer, okay? Oh, you meant B. Cool. All right, BB. Yes. You know, just like what I did a little moment ago, right? I typed the wrong answer. So that happens. That's okay. Good. I'm glad that's what you meant. All right. Last question of the day, 110. You can go and have some fun, take a break, because this has been a long hour and a half. So which of the following is not registered, licensed, certified, or regulated by the Texas Real Estate Commission? Okay. So remember, who does TREC license and who does TREC not license? Okay. Which of the following is not registered, licensed, certified, or regulated by Texas Real Estate Commission, known as TREC? A, appraisers. B, residential service contract companies. C, residential rental locators. D, easement and right-of-way agents. This one should come easy. However, questions like this one are missed a lot. A lot. Last chance to participate. Come on. So which of the following is not registered, licensed, certified, or regulated by TREC? Appraisers, residential service contract companies, residential rental locators, or easement and right-of-way agents? I would take another try, Rosaura. Residential service contract companies are home warranty companies, okay, that provide like insurance, okay, a warranty for appliances, you know, AC, electrical, plumbing, and mechanical issues inside the home. That's what a residential service contract company is. They're a home warranty company. Not homeowners insurance, but home warranty. So they are regulated by TREC. Residential rental locators are regulated by TREC. Easement and right-of-way agents are regulated by TREC. The ones that are not licensed, certified, and regulated is the appraisers. The appraisers are regulated by the appraisal board. Okay, TREC licenses, certifies, regulates brokers, sales agents, easement and right-of-way agents, residential locators, property managers, residential service contract companies, not appraisers. Okay? Got it? Got it? Hey. What's up, Fat Albert? Y'all remember that, Fat Albert? What's up? All right. So that was the last question for today. That was on Texas. So we did like 11 state questions and maybe 10 or something national questions. And we also did vocabulary. So this webinar is recorded and it'll be available in the YouTube AgentPrep YouTube channel. So if you're there or if you haven't visited YouTube AgentPrep, remember to go there. It is YouTube AgentPrep, and tap that subscribe button, click the little bell. You get notified every time I go live or load up a new video, and like this video. If you found it useful, helpful, hey, write a comment down below. And also you can visit the Facebook group. If you're not a member of it, it's Facebook Agent Prep. And there are resources on there. I have 14 different guides that you have access to. Or you can email me on Messenger, text me on Messenger, and I will forward it to you. Okay, hopefully this was a great help to you because we covered vocabulary, national, and state. Many times I only do either state questions or national questions or vocabulary. Today I did all three. That's how I started years and years ago. I would do all three. And I did live sessions in person at an office for 2 hours. And then I started doing it on Facebook, and then I added YouTube. So remember that you're going to be looking for a broker, a sponsor, once you pass your exam, or even before you're going to be interviewing. So I am looking for realtors, agents, students to partner with me at eXp Realty. So I am a practicing realtor in the state of Texas in 2 different markets, San Antonio and the Rio Grande Valley market. So I am looking for those of you that are interested in having a mentor, awesome collaboration, support, and an online office. We're a global business company broker, the same fees throughout the United States. We have the same cap for every single state. Okay. We have a global online office. We're a virtual company. So how do you buy? How do you shop? You use Amazon, right? Uber Eats and all these other online services. That's where the industry is heading more and more and more. Not necessary to have a brick and mortar office. We get to keep more of the money at our broker, okay, because we're a cloud-based company. And we have like 1,500 employees that are there to help everybody anytime with our eXp world. So you're interested to learn about eXp Realty, hey, send me a message and I'll send you a guest pass for 2 weeks to evaluate our system. So, hey, y'all, study, 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 and pass that real estate exam. Take it as many times as you have to in order to become a realtor and realize that this is your business. You're the boss of you. I'm the boss of me, right? And we're here to help you grow and create a successful business and a team. All right. So until next time, catch you later.